Yeehaw! Heidi ho, everyone. Welcome aboard. It is hump day. I hope you have a happy hump day, and I hope we can manage to put some more pips in the bank, pretty much like we did yesterday. Ash, lovely trade on euro dollar, and we were all in agreement with that, I think, how we might get a little bit of a rally in the euro. Not so much the euro itself per se, but the sell off in the US dollar, which I think was probably the better of the analysis. And I'm going to have a look at that very shortly as well, the US dollar index, because I think that's still in play, and I think we've got a very strong technical reason to think that that can still sell off today just a little bit further, and then we'll start looking for buy orders in the not too distant future. We shall see. All right. Speaking of yesterday, the pound trade, actually, it's only just closed in the not so distant past. We got the breakouts nicely yesterday with the long that took place, and we trailed our stops pretty much. Actually, last time I had a look, where are we? On the pound, we were out here. That's where we're out. It's had a little bit of a rally in the European Open, and now coming off that as we speak. Let's see what happens there. It is at a resistance level, as you can see. I think I'd be much preferring to trade that short today rather than long, but that's not what we do. We trade the breakout of the last three bars. So if you're joining us for the first time, welcome. It's great to have you on board. And if you're joining us on YouTube and would like to join us in the Zoom meeting, you can see the link there in chat on YouTube. So just click on that. It's that way, I think. That way. One of those directions, that link to join us in the meeting, where you can actually ask us questions. Live audio, feel free to do that. All you need to do is put in the chat that you would like to ask us a question, and it will be granted to you. Angel will open up your microphone, and away we shall go. All right, before we get too much into the show, let's look at what the range we're trading today will be. So we'll pull in this little EA. Where is it? Breakout, that one. And that will give me the range of, go over there. That will give me the range of the last three bars. And the low of the last three bars prior to London Open is this one. The high of the last three bars is this one. So I'll be looking to trade long here, just above the whole number, 1.3700. We'll round that up to 1.3701, and we'll trade short here, 1.3670. So let's actually put those in the market, shall we? We can't do it until the close of the bar, but pretty confident that we won't be going long anytime soon. So I will put that buy stop ready to go. Look, guys, this is in beta test mode if you were joining us for the first time, so please do not risk any hard-earned cash on this. You can trade in microlots if you want, but I don't recommend that you put any serious money on this, because we do not as yet have a defined way to trade it or manage it. So I'll get into the management very, very shortly, but here's the order. We'll be going long at 1.3701, and we will have a stop loss underneath the bar. And I don't know what that is just yet. What is it? It is 1.3673. Okay, so I need to amend that, wherever it is. Modify 1.3673, I think is what I said. Yep. Stop loss 1.3673. Okay, with less than a minute to go, I think I can safely put that in the market. There it is. And the short, I won't do that until the candle closes, because it may well get lower with a little bit of burst of energy. You just don't know. So this is a one cancels other trade. In other words, if the short is triggered, Then we cancel the long. If the long is triggered, we cancel the short. Okay, we're good to go here. 1.3670 will be the sell stop, 1.3670. Stop loss, I'll have to work that out. It's only going to be a tiny one. If this one actually triggers and we get a good run out of it, this will be a cracker of a trade. 1.3681. 1.3681. Where has my order gone? It will be there. Uh, 1.3681 is the stop loss. Okay. And there we go. Now, I will give you the levels and the TP1. I'll do the sell first. So the sell order is 1.3670. Stop loss, I've forgotten.
Hey guys, regarding the sex and the niggers.
Well, okay. Thanks for that, whoever you were. That should get us barred pretty quickly. Thank you for killing it, Angel. You did well. 1.3670. Stop loss is what we're after here. 1.36. That's not right. Let me get rid of that. 1.3681. That's what it is. 1.3670 for the sell, sorry. Uh, 1.3681. All right, TP1, which should be there, TP1. This is how you work TP1 out, guys. If we risk 11 pips, which is what we are risking here, we take half of that as our first take profit. So in this case, that will be 5.5. We don't have halves, so it'll be 1.36. 1.3665 will be our TP1. And TP2 will be double our risk. Our risk again is 11, so we double that, makes it 22. So go 22 under there is 1.3648. Okay, so they're the numbers that we'll be working with on the short side. Looks like we may even be triggered with that very shortly if momentum continues the way it is. And there we go. So we're in the short and we're looking for, what was TP1? I forgot now. 1.3665. Okay, so we need a little bit of a spurt on. We've got to close the long order. Cancel the sell. No, we want to cancel the long. Delete the buy stop. Yep. Okay, so that's gone. Now we need to get set to close half of this position if we're fortunate enough to get our TP1, which is 1.3665. So we'll get rid of half of that. And we can relax until that happens. If you're ready to go with that, you'll be closing half of your position at 1.3665, and then we will move our stops, the exact amount of pips that we take at TP1 from entry. And if you've got any questions around that, guys, now's the time to say, because we just sit and wait now until we get that that first take profit level. I'll get rid of this EA. It's probably a little bit distracting. There we go. Come on, guys. Push down. We are expecting a little bit of a sell-off here at this resistance level, certainly a little bit of retracement. So I'm on board with the direction. That works for me. Let's see if we can get it. yesterday's, if you were following it, went eventually 108 pips. We had a 23 pip of risk. I think that worked out to be, with our take profits, a 2.44.
Hey, Geoff, you're
Who is this? Who is this person? And how do they get in here? This is the problem with Zoom, I think, isn't it? You've got to be very careful. Righto, come on. 1.3665 is what we're looking for here to take our first profit on the breakout trade. Getting there. And we've got to get actually under it by the spread. So I'll probably try and get out of this at 1.3664. When I say get out, take our first profit level. Getting closer. Ready, set, go. Get down to 64. Very close, very close. There you go. I just got, where did I get out? 1.36. Sick. Oh my, I missed it. Man, I've got to move my stop loss pretty quickly now. So I only got about 3 pips of take profit there, but you can see how fast that moved. I will still move my stop loss. What is it? 11 pips? No, 5. 5 pips above entry. So my stop loss will go to 1.3573. 1.3573. $3,673, sorry. There we go, out. All right, that was a bit quick, and that's going to happen often, especially if you've got a small candle to trade. You can be in and out very, very quickly. So that goes down as a break-even trade, although I did miss my profits on the first instance. That's how we'll record that, because that's exactly what it was. All right, that is the pound US dollar breakout trade for the day, and it is break-even. A little bit on the fracture side. It's tough really to have a small candle when you're trying to get that initial run, because pound US dollar does tend to be a little bit volatile in the opening session at times. Okay, what do we got? Questions in the box. Rob's got a question. Okay, can we open Rob's microphone, please, Angel, when you're ready? They want to ask you for a crypto recommendation. Don't ask me for a crypto recommendation. I'm not the man. Oh, the kid. Who's the kid? Yeah, I think they're having mic problems. I can be co-host if you wish, so I can go. Oh, I can help you guys. I can be co-host if you wish, so I can remove him and the other bombers. Oh, okay, got it. Now, the Angel's on that onto that, John. Thank you very much. Lots of trolls. Okay. Unmute my microphone. Harry, are you a troll, or are you somebody who wants to talk to me and then and be sensible? Angel, how do we know? Do we just open the mic and see what happens? Goodness me. Okay, got it. Interesting. Maybe it's interesting to ask the question in the chat, guys. And if it's to do with sex or race, then okay, I'm interested. No, I'm really not. It was just a joke. All right, let's get on to some trading, shall we? And I'm going to share with you a couple of things, guys, because I've got a couple of orders in the market, and one of them could well be a nice slingshot. Oh, I might be too late. A slingshot. What did I get in at? 116.95. Okay, Swissy yen, guys, is the one that I took this morning in my group, and I'm basically trading the lower high here, which was this bar. We decided to trade this bar, entry just below it, and it's bang on entry right now, absolutely bang on entry. And we put our stop loss above these highs here, just in case we got a right shoulder forming, and that may well yet happen. Look, price action's horrendous. Wow, this is interesting, guys. I'm stunned. I'm embarrassed by what's going on in the chat box. Trolls. What do they get out of that? I wonder. I don't know. Anyway, it is what it is. We'll ignore it and look for sensible comment at some stage. If you've got a sensible comment to make, please feel free to do so. We have haters. Everyone's got haters. Why is that? Ah, I know. Opposition, maybe. That could be it. I don't know. Pure speculation. Anyway, if you're interested in this trade, they are the parameters around which I traded. It's on a 4-hour chart, and I'm selling at 116.95. That's exactly where we are right now. The stop loss is 117.32, and my TP1 is at 116.79. Now, I've got a whole chunk on this. It's very early in the year. I'm not a great January trader as a rule, but I do see things that are shaping up quite nicely. This is one. Why do I like it? Well, there's a few reasons, not least of which is we are right at the top of our resistance area, and we've come off the top of the range, the current range that we're in. And when that's the case, I'm always looking for a lower high. We actually got that, not to a great tradable degree because the candle is not super great, but it's okay. And it was a rejection of the daily and weekly pivot as well. Lower high back into the range. That's something I'm always going to trade. If it's wrong, it's wrong. We haven't, as I said, put a whole chunk of cash on this, and our TP1 is very conservative as well. Our TP2 is down here just above the monthly pivot, and if that's the case, if we actually manage to get to TP2, I would just move my stops to entry, wouldn't take any more profit, because I think there's the potential for this to go down to this area here, which is, some 300 odd pips from where we are now, on a risk of, 30 pips or something like that? I can't quite remember. What is it? 16.95, 37 pips. So, yeah, look, I think it's a reasonable reward to risk, and therefore that is why I've taken that position. The other position that I've got is Pound Aussie. Now, Pound Aussie is a bit of a combination for me of strength over weakness. Now, you may wonder what I'm talking about there, because the pound is the strongest currency on the board this week so far. That, to my mind, is interesting. And the only thing I can put that down to really is it's at such a discount level in terms of a currency, because it's just been crashing and crashing and crashing. But when I look at this chart, I see the big rally that we've had, and that's interesting, since 2016. But look at the strength of, the weakness of the pound as the Aussie has strengthened over the last, 20 months, something like that. Not even. Let's say that. And not 20 months. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 months. So you can see that there is a big difference here. The interesting part is the level at which we find ourselves, which is a pretty strong support level. I thought we actually snuck through that with this bar here. Close below the low, close below the, close below the close, close below the close. And the next level is down here at 173.06, which is a long way from where we are now. So I thought that was a reasonable position to take. Hasn't triggered as yet. And I know that there is pound strength in the market at the moment. I just don't know that that's sustainable, frankly. We shall see. And there'll be an outcome of that probably in the next week or so, as I guess the Brexit scenario unfolds and we start to get positioning and more information around what trade deals are on and off the table, et cetera, et cetera, et cetera. I just can't be a pound fan, I've got to say, and pretty much the same for the euro. I think they're question marks. Could go either way. I see the man who traded the euro yesterday in the room. Here he is. G'day, Ash. How you doing, bud?
How you doing? Yeah, good, man. How's things?
Can't complain, except we're getting told off in the in the chat box. We've
We
had
are?
a few. We've had a few of those. Well,
Mate, I'm
Four
going to
letter
kick everyone out of. I'm going to kick everyone out of the session who doesn't have two names. If you want to come back in, guys, log in with two names so we know who you are. We're going to stop the people crashing your show. So I'm
that'd be
right
good.
now going to delete everybody from this room that's not with two names. And if you want to come back in, please come back in with two names so we know who you are. And if we can't identify you, we're going to leave you out of here. So we're starting now, guys. I'm not having the stuff that's been going on in this room continuing on our shows.
Thank you, mate. Yeah, look, why? I don't know why, but people are people, and you can't control
Right,
it.
someone was good enough to post your link on social media, and it's been trolled out and found, and people are coming in. And it was someone who was trying to do the right thing for you guys. And having said that, there's to be no one in this room, guys, with one name again. Angel, if you see someone coming with one name, just kick them straight out. Let the guys know, and make sure that people come in with two names. And if we don't identify know the names for the rest of the show, just send them back in. I'm concerned that we've got the same link for the rest of the month on this, so we may have to change that to stop guys coming back in, guys. I'm not interested in having the stuff that's been going on in the show going on in our shows at all. Angel, you've got it from here? Angel?
Yep.
Great.
Yep.
So anyone that enters with a single name from now on gets kicked out, apart from Ash, Jeff, or you. And don't even send them a message. Just kick them out and have Ash and Jeff talk in the show about the fact we're going to do that from now on until we can get control of people crashing the show. This thing's going live on YouTube, and we can't have those kind of things being posted into and Facebook. We can't have that kind of stuff posted on social media to kick us out. But I think with Donald Trump.
Donald Trump.
I shouldn't have started. I know better when you're in the room. I know better. You got your day sorted out now, Jeff?
Yeah, I think so, mate. It's the 30th today, isn't it? Is it the 30th today? Unbelievable.
Ash, you okay?
I'm good, mate. Yeah, I'm good. Yeah.
We've had a couple of crashes come in and put a bit of sanity into our show, so that's why those guys have all gone.
Oh, I'm a bit gutted. I missed them.
No, you shouldn't be.
I mean, you know, I like to slap people back into reality, but that's okay. No problem at all. Let's get back to the markets and talk about some trading stuff instead.
Cheers, guys. I've got to jump out. I'm just going to call with Lloyd. I'll see you guys later. Okay.
All right, buddy. Thanks,
Cheers,
man.
mate.
See you later.
Yeah.
Okay, there you go. We've got the police on the job, guys. So you need two names. Get two names if you haven't got two names. I'm sure you have. You're born with them. So just use them. That's all you got to do.
Yeah.
So what's on today, buddy? What are we doing?
Well,
I've
interesting.
given two positions that I've taken, and what have you got up your sleeve?
Well, I mean, obviously, I'm looking for a dollar long. I think the price action is quite unclear. Let's put it that way at this point. I was going to say interesting, but price action is always interesting, so it's a bit of a wasted comment. So I think it's quite unclear, and I'll show you what I mean by that. Because
Sure.
we've got some short-term upside still looking like it's there with the euro dollar, but still some I think longer-term downside is also a possibility or probability in my opinion. So now, as you know, I've posted out in the Telegram group about a trade that that I would look for and what I'd like to see with the euro dollar. So let's talk about that first. The trade was on the 15-minute chart is where I wanted to see the setup happen, and it's effectively, you know, coming back up to this area here and looking for some downside. Now that area might be tested already, and I did say in the Telegram group that price has to be an approximation, because I can't say exactly when it's going to break down or where it's going to touch. But now we have broken down, then we're probably looking at around about the 122.10 ish. Sorry, not 122.10, 122.8. Is kind of the area that I'd like to see some downside from, but now I can't, as I say, I can't fully remember. Which I'm going to have a quick look, mate, just to see whether that was the price that I had, or is this going to be? Yeah, actually, it might be a little bit tricky to for me to find now. Oh no, I've got it here. Okay, so the price that I posted, this is what I posted in the Telegram. So I said 122.10. Yeah, so we're close enough to that that area. You know, if we get back up to these highs, 122. 8 it got to, I think 122.08, 122.07. So we're in a few pips of that. 122.10 is still relevant. But this is the picture. So and this is the thing, as you know, mate, about timeframes and timeframe correlation. There is no correlation going on with the timeframes right now. So this actually makes it a more of a dangerous trade. And what I won't do, what I will never do in the Telegram group is tell people how much money, how much of a percentage of their account they should be risking on a trade. And the reason I won't do that, even though I think it's fine to do that from coaches, but the reason I won't do that is because I think that there's two reasons. One, I think that everybody needs to start to kind of take responsibility for their own money management. But the second thing is that if you follow what Jeff or I are doing with our money management, then you may not be comfortable sleeping at night. You know, you have to sort of like think about the kind of person you are and how risk averse you are. If you're not particularly risk averse, sorry, if you are risk averse, then you're better off putting on a much lesser percentage than somebody that is you know, quite keen on risk, quite keen on taking risk. What's that, buddy?
I said that's me. I'm risk averse.
Yeah, so you know, so if you put in, like, let's say, the two of us are different characters. You say that a trade is at 1/3%. I say it's at 0.5%. Neither of us are right. Neither of us are wrong. But it won't be you know, nobody can follow not one person can't follow two people's approaches to money management. So I think it's fine to follow our two different approaches to trading, but you have to follow your own particular parameter when it comes down to your money management. I think that is a fair requirement, you know, from us. You know,
yeah, I agree 100%.
You know, but so let's talk a little bit about the trade anyway, and get back to that. So we've got this breakdown here. Now you can see that there is a head and shoulders pattern that formed. It's not a great one, to be fair, because we didn't get the lower high here. And in fact, you could argue that that's a higher high because of the tip. So let's give it a different name for this pattern and see what we've got. Let's see if it's this. Could be that channel. Yeah, I think that's okay. I think we've got this channel. So that now gives us an area for our measured move. Now, this doesn't give us much in the way of breakdown. It broke down from this bar, so we measured to the bottom. Look at that, mate. Right on the money where it turns. I mean, that's, you know, it doesn't always happen like this, but if we're looking at a 15-minute pattern, we're measuring a 15-minute move. When that has broken out, it gives us this price as a low before the potential first bounce, and that's what this is attempting to do. Not telling you the whole move, but the measured move after the first bounce. So, you know, to the first bounce. So this is what that's given us. It's given us the first bounce back up again. Now, it should still touch this upper line, or should still touch this high one more time. So putting an order in here is absolutely fine and adequate. Then coming down to the daily pivot, you would then expect another bounce, another potential bounce, and then it could get right back up to the original price again. For it to be genuine as a breakdown and start following the longer term trend, it's got to get through here. And, you know, and it's one of those that I suspect you'd probably quite like this pattern, Jeff, if it was to happen, because, and we'll have a good look at it. Have a good look at it now, but let me draw this on the screen instead of using MT4. So we're coming down here. We want this to break all the way down, come and retest the lower line. Then there's the trade there. That's another valid entry, and this is where scalings kind of start to work out quite nicely if the market unfolds the way you know we want it to. I mean, it could even do this. You know, it could even break down here, all the way down, bounced off that monthly pivot, and then you've got, I mean, that would be a nice clean entry there, right there. So so that would give us our entry off this lower trend line. So that would be the ideal. Now, where it would come into sort of having adding to positions, which I will post in the Telegram group if it happens. You'd want to get in somewhere around.
Mate, just before you go on, if anyone's in the room, apart from those one name people, terrible people, who is not in the Telegram group, it's completely free for the next 28 days, guys. Get in there, see exactly what we are posting in the Telegram group, and if you like it, stay there after the free trial. Happy days, but please take advantage of that for the next 28 days. The link is underneath us in the YouTube stream, but I think Angel will probably put it in the chat box as well. So if you haven't joined the Telegram group, and believe me, there's some good stuff goes in there, and will be.
Yeah, it will continue to be the case. Now, yeah, so let's talk about this, mate. Just to finish up here. So we want one entry here. So this would be entry one there. Now, if this breaks down, what we'd want to see is it come down to the bottom, somewhere around here, about here, take some profit probably, and then see if it goes through. And if it bounces back up again, there's entry two. So this would be a kind of a scaling. Entry two would be right there. So that'd be a little scaling kind of situation and scenario. Now, really, this is the best entry. And the reason for that is that while the price action is above this trend line, it's not in agreement with the longer term pattern. And I'll show you what I mean by that. So we've got, let's bring this onto a clean chart just so it's easier to look at on longer term timeframes. So what we've got is a let's start with a weekly. We've got a high with a weekly, and if we have a look at where this high exists on the weekly, then not too far away from this point. Now, I'm sure we'd probably get some kind of trend line. Maybe not. Yeah, we do actually. Yeah, we do. We can use this. Let's use this. There we go. So we are at a bit of a trend line high here as well. So we got this trend line here. So we're at the top end of a channel, if you like. Let's see if it is a channel to start with. Yep, top end of a channel on the monthly chart. That's what we got. So this is the big picture. Top end of a channel on the monthly chart. Now that suggests that we have some longer term resistance potentially going to be forming at this particular point. Now, if we go down to the weekly and see if we've got any kind of indication that might be happening, we do see these bars just weakening off a little bit. Inside bar. Now, an inside bar is quite negative. It's a gap down, and price action existed in within that the previous day's price. The body of the previous day's price, so that's a negative sign. We have this this high test bar, or not quite a shooting star. Let's call it a high test bar to make it easier. This one's more of a shooting star because we do have the gap to the upside first. Nice point to the very top where we see the high. Now, longer term positions are going to have stops up here, which is where I've got stops. So they're going to have stops up here, and then it's just trying to then establish some entries along the way down here. Now you can try and get an entry as it comes up, and then as it comes down, follow the trend down, entering all the way down with these stops just moving down when it goes down to the next level. Move the stop down to the next level. Move the stop down to the next level, edging in all the way down, and that would be the obvious point to say that the market will potentially bounce or at least hold. On slightly longer term timeframes on this weekly time frame. Now, when we look at the daily, do we have the start of a trend? So on the monthly, we found our resistance point. On the weekly, we got a hint on some of the bars that it was changing. Now, on the daily, do we have the start of a trend? And the start of a trend we know is the first higher low or the first lower high. Do we have a lower high? Possibly. We don't know for sure yet because we don't know where this price action is going. But we've certainly broken down this first lower high or first lower low. Now we certainly do have a breakdown of this support area. So we do have a lower low on the daily. Now, does this form the lower high from this point? We don't know that yet. And we won't know that until it clears this low. But it is struggling here, and it is showing that the traders are interested in this particular price point, and that could be for a number of reasons. It could be because of pivots, it could be because of Fibonacci levels, it could be because of trend lines, it could be because of horizontal levels. Number of reasons that this particular price point is being picked out. But we do see that lower low. And now, sorry, the first lower high potentially forming. Now, if we go down to our 4-hour chart, what we want to see is the 4-hour, the 1 hour, and the 15 in agreement with the trend to give ourselves a higher probability that we've got the right timing of our entry. Now, if we look at the 4-hour, we see that there is a little trend line down here. Now, the problem with this is that the trend line has been broken to the upside. So is this 4-hour still in a downtrend? You could argue it is. This area down here, so some people might say that that's broken out of this resistance point, and now what we're getting is a higher high, and the first higher low might be forming down here. And I think that is completely valid and completely fair. So that would suggest straight away the 4-hour timing isn't quite there yet. Now let's have a look on the hourly. What does the hourly say? Well, the hourly is a bit cleaner because we definitely do have a break of a channel down here. And this is the same as that 4-hour area, but there is a break of an area down here, and it's not a channel actually. It'd be maybe something else. Let me just draw this line back in. It is probably something that looks something like this, which looks like a symmetrical triangle kind of pattern. We'll do a little measured move on that and see if that's what we should be looking at. Okay, well, it suggests it might be, but let's just see if we can tidy this up any more. Looks like there's a channel down here of some sort. Probably going to give us the same kind of result, actually. Yeah, it's going to give us the same result. So it's probably, I'd like the breakout to really dictate the pattern if we can get that. So let's just see if there's anything else that might suggest the pattern here. Now you can see that really with this we might be starting to stretch the friendship. This one looks okay. That looks like that we got enough touches there. So let's do a measured move on that. Yeah, that looks like it is the pattern that we should probably be looking at. So so what we've got here is an hourly move to the upside. So it's the same as the 4-hourly. The 4-hourly and the hourly don't agree with the monthly resistance maybe starting to happen, the weekly indication that those bars are in place, and more specifically the daily lower high. So the timing could be off for us getting into a downtrend. Now that's for us getting into a sell here. That's not a problem. What it does say to us is that moving to the upside, going long, at these points is okay, but don't expect too much. Now we did take a long in the euro dollar yesterday, which turned out to be a winning trade, and that was a very short-term trade that I was looking at. But there might well be some further upside with the euro dollar. And we're looking at potentially a move back into one of two areas. It's along this trend line potentially, and it could be that we are looking at the area that we just picked out, which was what was I just drawing? Wasn't that one? Was it? It could be this one here. It could be this one here. I can't remember what I had now, Jeff. It's no good, is it? I think it was.
It happens.
Yeah, it happens to me a lot.
It happens often. Where was that bloody thing? I knew it was there.
Oh, you know what? I think it was there. Yes, it was. It was there. So this price point here, somewhere in this price point here, looks like the area that is almost like the last line of defense on the euro dollar around here. So that's the area that I would expect more traders to start buying this back up again. Now, if that doesn't happen and this does break down and then retests this area again, that does start to have the hourly, the 4 hourly, then the daily, all in agreement with some downside. So this is the price point where it becomes, if you like, safer to enter. These areas here are really good for getting us into a trade, stops at the highs, getting us into a trade, trying to take a speculative position. If it breaks down, we add to it here, and then we've got our full position on that we can really start to motor to the downside. Now, these ones do sort of, this is a dip your toe in kind of thing, because while this price action is still showing on these short-term timeframes that there is some upside, then what may happen is that it might actually just come down here and bounce. And then we're looking for another price action point to say, okay, we've got to break down there, and there's our next one where we're saying, right, this is our stop up here, and this is our entry price where we're going to speculate into getting in. So we can take the small chunks in the first bit and then take the bigger chunk when it starts to come and break through the area there, or add the rest of the chunk, if you like, into that area there if it breaks down and confirms that the short term timeframes are going with the longer term time frame. So that's the plan, mate. That's what I'm looking at with the euro. That's an overview of a breakdown of what I'd like to see. If we were to look at the 15-minute chart, then we can see that the 15-minute chart has also given us that lower high as well. So we got a lower high, we got a lower low on the 15, we got a lower high. So the 15's in a downtrend. The hourly is in an uptrend. The 4 hourly is in an uptrend, I'd say, arguably. The daily is in a downtrend. The weekly is also in an uptrend, but it is showing signs of potential weakness on a resistance point, and the monthly is also in an uptrend. So we are fighting, if you like, the longer term move. However, we've now reached a longer term position of resistance where we can maybe take advantage of at least some retracement off this monthly time frame.
Yeah, look, I've got it dependent very much on the dollar, rather than driven by the euro, frankly. That doesn't take away from exactly what you just said. We are at a resistance level, no question. And I'm very, very close to saying that the dollar index has almost reached where it needs to be for me to be a buyer of the dollar, that is. So I'm with you, just not quite ready. And we spoke about this, the other day, I think, where the dollar index, being a conglomerate, if you like, of 6 currency pairs against it, or 7 currency pairs against it, tends to never be exact, in my humble opinion. It goes to a level that you think, okay, that's a definitive level. It's got to go there. And then it gets within, 10 pips or whatever, and it actually reacts as though it had hit that level. And maybe that's the case where we are right now. We're having a little bit of a rally today thus far. Well, certainly in UK session, wasn't earlier in the day in Asia session. But I do see that the dollar index, should I show you? Probably.
Oh, yes, please do, mate. Yeah.
Rather than just talk about it. Right, share the screen. Hello. There we go.
You share your screen, mate. Anybody want to come in into the show, then just stick your hand up, and you are more than welcome. As I said yesterday, this is your show, guys, so take advantage of anything you want to say. If you want to use it as a platform, then come on in. Great, John. All right, buddy. You're on after Jeff.
Happy days. So, as I see the dollar index chart, and I don't know why it won't move. There we go. It is moving for me. Let's bring it into sharper focus. We've got this descending trend line. We've got a descending trade line as well. And we spoke about this on Monday, that we expected that we'd hit that trend line, or that trade line rather, because it's at a beautiful level, absolutely gorgeous level. And I haven't got the horizontal level on there. Let's put it there. Horizontal line, there we go. If you line that up, and it's probably a little bit higher than where we are. about there. Oh my goodness. I'll learn how to use this one day. So we're about there somewhere, I would imagine, in that vicinity anyway. You can see the beautiful, stop it. You can see the beautiful confluence area that we've got here. And that's why we were pretty confident that this would bounce at that level. And where was it going to? This level here. We spoke about that on Monday, and I think maybe even yesterday. And I still think that's in play. This, which is what, 89.75 or something like that. So just below the 90 level. At that point, that would then give us a left shoulder, a head, and a right shoulder. The only question mark I have on that is it took a long time to get down there and a long time to get away from there. This looks a bit rushed to me. So I'm kind of in the ballpark area of a range, a short-term range that, you know, just meanders down to this level, puts in the right shoulder, and then takes off and hits that trend line. So that's kind of where I'm at on the dollar index, which means if you translate that to euro, Aussie, CAD, pound, etc., you should still see, in my opinion, a little bit more in the euro to the upside, a little bit more in the Aussie to the upside, a little bit more in the pound to the upside. I'm not seeing that at the moment because the dollar is having a little bit of a rally.
Yeah, we've got Christine Lagarde as well, mate. Christine Lagarde's out in about 20 minutes, so that's going to put the brakes on much of the price action until she speaks.
And then we've got Powell. Is it tomorrow?
Powell tomorrow.
Be the one.
Mm-hmm.
Yeah. So this could change rapidly at some stage. There's no question there.
Oh, do you know what, mate? I think that's really good analysis, though. I think you're right, because it's taken such a long time to get down there. You would expect it to have to carve out some interest down here. You know, why all of a sudden would traders jump in and push this, you know, all of a sudden flying to the upside? It's not there unless Powell, as you say, it could change rapidly if Powell was to intimate that the tapering would ease, or that they might be subject to changing their view if bond rates, were to continue to the upside. They're off a little bit today, but they did strengthen over the course of the last week. We saw the 10-year yield start to bounce up, and it's things like that could actually put Jerome Powell in a position where he has to react, or the Fed in a position where they might have to react. So if he intimates that, then all of a sudden, then you'll start to see the US dollar and the 10-year being quite closely watched and correlated. So it could pop, but I think that's really good analysis, and I think you're absolutely right. You would want to see something in the way of symmetry. That left shoulder, what's that? I mean, that left shoulder is that's taken a good 10 days to form, and we're only really in day 3 of the right shoulder, day 2 potentially of the right shoulder. So so we could be waiting until next week before this really starts to carve out a genuine low here.
And that makes this target, all the more relevant, in my opinion. Now, if we take that long to get to here, then that becomes realistic to me.
Yeah.
And that's kind of where I'm at. So the one question that's on my mind is, how do we trade that? Do we trade it down to here, which means we trade the longs on euro, Aussie, Kiwi, CAD, etc.
Yeah.
And if we are of that opinion, do we trade the ones that have been stronger against the US dollar, like the Aussie, like the Kiwi, like the pound of late as well, and like the euro of late? Or do we look at something that's been a little bit weaker, like the yen or like the Swissy? And that becomes the question for me.
That's a fantastic question, mate.
The massive turnarounds, or are we going to see the ones that were closest to the dollar? Yeah. It's a real question for me, and I find that hard to fathom.
my particular view on that would be that if we were to focus on something fundamental, I think we have to bin the likes of the Swissy and the yen. The Swissy fundamentally, because of the COT data, would suggest that the Swissy is, incredibly weak, if not the weakest of the currencies when it comes down to COT data versus the US dollar. But the yen you'd have to bin, because next week they're talking about downgrading their own economy. That there could be an announcement for downgrading the economy next week. So I think we'd have to bin both those two straight away. Now, I think if you're looking in the middle range, would probably be things like the euro, possibly the CAD and the pound. The pound becomes interesting because of now the Brexit cloud is cleared. The fundamentals don't necessarily have to take precedent at this stage. There could just be a bit of a relief rally after the absolute battering of uncertainty that we've seen over the last 4 years.
And we're seeing that because it's the strongest currency on the board right now.
Yes, it is, and it's no surprise really. So I think the pound becomes interesting. The pound becomes tradable against the dollar. If we're looking at that US dollar index chart to sort of say, if this is coming down, let's pick the pound. I think the pound would be a valid one. Now, the euro becomes a play if I think you could get some sort of hedge. Yes, Angel, I absolutely will, no problem. The euro becomes a play if you can get a hedge, i.e., are you short? And if you can get a short in the market, then the long is worth playing. And possibly it's still worth playing anyway, because let's not forget that if the dollar index is going to be moving to the downside, the currency that has the greatest likelihood to be moving to the upside is the euro, because the US dollar index, the DXY, is more heavily weighted towards the euro than any other currency. So the euro does become a play, but I say you would bin the yen, and you would bin or in my opinion, the yen and the Swissy have to be binned. The euro becomes interesting because if it's about the DXY, it's really about the euro. The pound becomes interesting because of the cloud of Brexit, and I think the Aussie and the Kiwi also, forget the CAD in my opinion as well, too closely correlated and a bit difficult to kind of to get a real grasp of the CAD while the oil story's going on. But the Aussie and the Kiwi becoming interesting purely because the fundamentals are strongest, of those two currencies, particularly the Aussie. So I think any of the those four become a play, but you have to make sure that you are trading on short-term timeframes, in my opinion, which means that probably the 4 hour is as high as I'd like to go if I was analyzing the chart for taking a trade against the dollar. I mean, let's not forget gold as well, mate. That's also a play. There could be a play in gold, and we can't forget gold because with gold, what's that, mate?
I say I forget gold very easily. I don't trade.
You forget gold, but we shouldn't forget
it's
gold
no
because
problem for me.
But gold has seasonally got this run that is due at this time of the year. Now we have to look a bit more deeply into it, which maybe we will over the course of maybe tomorrow. It'll have to be now, but reading some bits and pieces on gold would be and silver would be of interest. But it does become a play. It does become an option as well. So I think there's some validity there, mate. I think a greater question is the timing. Would you wait until Jerome Powell has spoken? Because my suggestion is that it will probably be quite wise to do so.
Well, can't argue against that. What I can say, again, and I repeat this, is this dollar index should, in my humble opinion, get down to here. But like I said before, this is also apt to not go where you think it's going to go. It gets close and then it pulls back away. This could be that. This could well be that. I certainly wouldn't trade it at this time, but it could well be that. The acceleration point is here above this bar. So if this is going to go, it'll probably accelerate here and go to that trend line, I would imagine.
One last point as well.
I'm not sure I'm ready for that.
One last point on this, mate, as well, is that your point about the US dollar, the DXY not quite getting to levels that you expect it to, and I think you're talking about the 89. that is still a possibility. Still a possibility that we actually do get down to the 89 before the buyers genuinely start coming in. So we are playing the dollar. We're looking at the longs. It might not even be that we're going to get that reversal here. We might get down to 89, spike down. Jerome Powell might say something, spikes down, then it starts to bounce up from that particular price point. Who knows? But that's still in play as well. So there's plenty of things to consider, I think, with the dollar. Could we bring
Agreed.
John in, mate? Are you
We
all right
certainly
with that?
can. I was going to say, sorry, John, you're probably going to sleep while we're talking about all this.
Yes, Angel, could you unmute John for us, please?
Unmute, bang, we're in.
There you go, mate. How's
Look,
things
There
going?
he is.
Hey, things are okay. It's all new to me because, again, it is after Christmas. There's, you know, everybody's got the guns out in America, and then I'm thinking, right, is it? My thinking is this: is that after the new guy's in, I'm not saying trading's not easy. I've learned that over the last 10 months, but does it become a little bit more stable in that you've got not a brilliant idea, but you think, okay, right, there's not going to be some stupid tweets coming out of somewhere that move the market up and down like this. This is going to be like the normal, okay, well, Jerome Powell's going to speak. Okay, everybody's got a fair idea what he might do. And then it's not so like,
Yeah.
I don't know. Just a question, because obviously it's completely, it's new water to me. I'm giving it, okay, but this idiot's going, does it go back to what you knew before? Not in the case of you can predict everything, but you're going into the water you've seen before, that you've got a fair idea. Okay, this isn't going to go well. Why? Because they can't sell their oil. Okay, I'm into this. I don't know. That's my.
Well, I mean, I think just if I could rephrase your question, and if this is what you mean, let me know. Are you effectively saying, can we now focus on the fundamentals rather than the factors that are outside the fundamentals, i.e., a comment from somebody like Donald Trump? And if that's the question, I think that would be a fair judgment of what is likely to happen. Nobody knows, obviously, but that would be a fair judgment, because Joe Biden isn't Donald Trump. He's far from it. Donald Trump is a one-off. The pandemic has been a bit of a one-off. They do happen every now and again in the markets, but yeah, you would actually expect it to be more about the fundamental data that comes out. So what do we then focus on? And we can get back to focusing on the Fed. It becomes really interesting because even last year we were focusing on the Fed, but because of the pressure that Donald Trump was putting on the Fed in many respects. So everything that was going on last year, for the last 4 years, that has been driving some of these markets, somehow linked back to Donald Trump. The trade war that was going on, the trade war between Europe and the United States, the trade war between China and the United States, the Korean situation with North Korea, Jerome Powell getting pressured to lower interest rates. So you're absolutely right that you wouldn't expect it to be about these kind of things, these kind of knee-jerk things that tend to happen. What we might still see trade wars, and we probably will see some sort of trade wars, because Joe Biden will still have the same issues that Donald Trump has, but he will probably handle them differently. So he won't use Twitter to express those views. So we'll still see some knee-jerk moves in the market. They might be less extreme. They might happen less, but we will still see those knee-jerk reactions in the market, because there will still be things that need to be controlled by the U.S. government, and some of that will be down to unfair trade balances that are going on. Some things will be down to just trying to control the power that China currently has. So I think we probably will be more looking at fundamental data. And I think Joe Biden will probably make his decisions more on fundamental data as well. So it means that we do need to focus on that stuff. So I think that's a fair judgment, mate. I think that we can focus more on the numbers. I think a big thing to watch over the course of this year. Now, presidential elections have a specific pattern that they tend to follow. Now, stocks tend to do quite well after the first year. So we'll probably see some we'll probably see some stimulus. We are seeing stimulus coming in, but there's a lot of debt. That the world is carrying a lot of debt. Now, one of the biggest things to watch is what happens to the stock market when the Fed do start to taper. Because we've seen valuations in the stock market are probably elevated. Can corporate earnings keep up with the elevation? Because people are being forced into buying stocks. They're forced into it. Their money is doing absolutely nothing anywhere else. Watch the 10-year bond price, the bond yield. Keep an eye on the 30-year. Keep an eye on the 2-year. Because if we start to see bond yields increase, then the stock market will likely suffer, because people don't want the kind of exposure that they have got with the stock market that they currently have. So I think the stock market becomes a really interesting play, and where we are expecting the first year of the presidential election to continue to allow stocks to rise. There is a change coming. And the change will probably come from the numbers. If the numbers continue to be positive, then it won't necessarily equal further rises in the stock market. It may well equal weakness in the stock market, because if the numbers start to improve, that puts pressure on the Fed. If it puts pressure on the Fed to raise interest rates, that means people can take their money out of risky assets and start distributing it more into the non-risky assets that are available.
Yeah, Ash, also this is a new presidential cycle. So
yes,
cycle-wise, whenever a new president takes over, people want to see. So, the market is kind of steady, but supposedly in June it takes off, because people want to know what Biden is all about. But it is
right.
But you got to take time for people to digest the news and all his new policies.
Yes, that's a really good point.
I think, John, you're on 100% the right track, thinking that, and if I can put it this way, it will be less unpredictable if there's such a way to look at anything. Why? Because to my mind, there has been no one person on the planet, in the history of the planet, that has been as influential to the markets as has Donald Trump. And that is mainly due to social media and Twitter. The one thing that I will take away from Donald Trump's presidency, so there'll be plenty. One of them will be, let me put it that way, that you could not be super confident that he wouldn't tweet during the night while you're sleeping, because we live in opposite sides of the world, right? You could not be confident that he wouldn't spoil everything just with a tweet. So I think you can trade far more confidently than would otherwise be the case. And there was no way to predict it, right? Absolutely no way to predict it.
Yeah, that's all. I understand that, it's a stupid statement that the market will go up and down and the dollar's in an impossible position. I just think, right now, with this guy not there, it's not like this, but just sort of not normal, but just market conditions rather than somebody. It's almost like Donald Trump had all of the money in the world, and if he wanted to make the market go down, he liked it on, and the next morning he's like, okay, I want to buy it all back and put it all on. It's like Ash said, one trader can take the market one way or the other, and it's almost like Donald Trump's tweet. I don't know.
That's fair, mate. That's fair. Yeah, it's almost like he was that trader. You're absolutely right, and that's exactly the point, isn't it? The point with market psychology, with trading psychology, is that we have to understand that it takes. I mean, let's forget saying it takes one trader in the world to change your edge. It takes one person in the world to change your edge, especially, and Donald Trump has proved that. So actually, you've quite nicely made the point about trading, which continues to confirm that safety is the key. And defense, being defensive, is the key. you know, and Donald Trump, in some respects, he has taught us a fantastic lesson over the last 4 years about safety and being safe. And you couldn't be in the market at a better time, John. I have to say, you know, that you entered the market at probably the best time. If you survived this first year, then trading from this point should be a lot clearer. I'm not going to say easier because it doesn't work like that, but it should be a lot clearer. And the reason I can't say easier is because your brain can get, you know, your mind can get play all sorts of tricks on you.
My idea in the first year was to get to break even, and I thought if I can get through this chaos.
And how did you do?
I'm at the minute. What am I down? I'm probably down $20. I had a couple of short trades that I've taken, and they came in. So yeah, about $20 down. So I'm happy with that because
that's good, mate.
You hear all the stories of accounts just like exploding, like it's the end of the world, and I thought, well, I'm nowhere near that. So along with your help, I mean, everybody says I'm doing okay, but I know that I'm doing well.
Yes.
Because I decided to listen.
Yeah, well done, mate.
And get that way, but I don't mind admitting that I am completely novice at it. So you people have done it for longer. I think, right, better ask them the question. What goes on?
You got your mind in the right place, mate. That's a fantastic start. If you've got your mind in the right place.
Yeah, and the thing is, we're all novices, and really we all will be novices to the end of time. It's no different to music, John, in that respect. I'm teaching my daughter how to play piano right now, and we were talking last night, and she was saying to me, oh, you're really good at piano, Daddy. And I said, I'm relatively good at piano when you play. but if you kind of put me up against Ben Folds or something like that, then I'm not good. It's all relative. And it's because we're always students. You know, if we learn something which is always opening up, we are always students, which is why this is such a brilliant industry and why we love it. So, yes, it's great that we can learn from each other, and that's what this platform's about. And actually, John, thanks so much for coming on today, because this is what we want this show to be about.
For me, this is like a gig or playing rugby. I'm a rugby union player. I used to be, and this is a bit weird analogy. That's what this is like. If I don't get out on the pitch, or if I don't get out on stage, if I don't get out on Zoom and talk to you, I will not learn.
Yeah,
I can learn through a book and looking at screens, but you learn more through interactive content.
Oh, absolutely.
And I just don't understand personally.
Any teacher on the planet will tell you that.
I don't understand why people won't. I can understand why they won't, but they need to stop and just, because I'll ask something, and it'll just come straight out rather than typing it, and you can go, "God, he's an idiot. We better correct him," or "Oh yeah, that's good," but you can't get that interaction with the typing.
Yeah.
We all know that you can't improve if you don't get out of your comfort zone, and that's worldwide and anything you do. Ash, you've got to go.
I've got to go. Thank you very much.
Thank you, John.
John, could you self-mute, mate, by the way, when you finished, and anybody else who comes on board,
thank you very much.
You're welcome.
Have a lovely day.
Yeah, you're welcome.
Cheers,
you're
mate.
welcome, John. We'll see you tomorrow. Come in any time, mate. Come in any time. So you end up any time.
Bad day. MCO here, so we're going to be in our new lockdown. That's why I wasn't on.
Oh, no worries, mate. No worries. No, I mean, yeah.
All
You are always welcome, as everybody is. So anybody wants to come on, then pop in. Thanks as well, Shukri, for the little market update about June as well. That's going to be quite important to continue to monitor. Right, I better shoot off anyway.
Mate, got a hot tip? No.
Have I got a hot tip?
Yep. Poker, right? To poker in the fire.
Not right now. So Christian
Get out of here.
Just speaking, I better get out here. Enjoy the rest of your day, guys. See you in the morning. Thank you, Jeff. See you tomorrow, buddy.
Cheers, mate. You too. I'll chat on Telegram with you, no doubt. And anyone who's not in the Telegram group, you got to join the Telegram group. The links are all over the place. Get in there. It's free for the next 28 days. See you, mate. Have a good one.
See you guys. Bye-bye.
Just, I haven't got a whole lot more, guys, but one thing I do have is an update on Aussie Kiwi. My screen's been on, so you probably saw me move my stop loss on that. Those who are in this trade, I have just moved my stop loss to 1.0692, locking in a little bit more profit on that. Let's see how today goes. If we come back to the weekly pivot, which is what is probably anticipated, I think we can probably go again. And if that's the case, we'll continue to trail. If it reverses, then so be it. We've locked in a good deal of profit. That's fine. EuroCAD, we are still looking to enter that. If you weren't in yesterday or not in the Telegram group and wondering why on earth I'm trading this on the monthly chart, there is a full explanation video-wise in the Telegram group as to why I've chosen this over the daily or the weekly. You should find that enlightening, if nothing else. And it should tell you something about the way I trade. So pop into there and have a look at that on the Telegram group, if you're interested, that is. Price action is doing absolutely nothing here, as we probably did anticipate, and that's why I didn't trade this bar here. This bar here was, it's a great bar to trade, but it's out of context. It really needs to be up here somewhere, which is exactly why I said I wouldn't explain this today, but it's exactly why we traded this, right? We had a sell-off, then we had a retrace, then we had the bar. On the daily chart, we didn't have a retrace. All we had was one single bar. Not good enough. We need to have a little bit of a buying so we can actually create that lower high. So that's EuroCAD. Euro dollar, we've spent a fair bit of time on Euro dollar today. I am 100% bearish, but I'm not sure it's now. And as I said before, I based that on the dollar index. I kind of think there's room for this to go a little bit higher, maybe take on these highs. Don't really have a confluence area, which concerns me a little bit. Maybe that can come down a little, like so. That kind of makes more sense. If we got up to here, it'd happen very, very quickly, or would have to happen very, very quickly. And we're talking about that level there. But I see that as a possibility, you know, around the 124.70 mark, then short. That's kind of where I'm at. But Ash has put up a very good case for his scenario as well. Pound US dollar trade today was a break even. We got in TP1 very, very quickly, and you saw all that happen. And then we got taken out at break even, as I said. There may be a slingshot 2 opportunity here for this, but it hasn't got away far enough. And what do I mean by that? We're still at the same level. That's what I mean. To have a slingshot 2, which is Shukri's invention, we need to pull back away from this level, then come back at it. Same level, but yeah, you got to get away from it before you take that one on. Aussie, haven't spoken much about that, and really nothing to do. Again, going back to the US dollar, I think this is a trade, and I think it's a trade short, but not yet. That US dollar's got to get down a little bit further, in my humble opinion. But when we do find a short on Aussie US dollar, it could go a fair way, because this has been really strong against the US dollar. So and I asked that question earlier, and I really haven't answered it to my own mind. What do you trade if you think the US dollar is going to rally? What do you trade against it? Do you trade something that's been as strong as the Aussie against the US dollar? Do you trade that back? Or do you trade something that's been mid-range, like the yen, the Swissy? It's a great question. I'm going to think about that a lot over the next day or so, and I'll probably come up with an answer that as long as I've got something to back it up, then I'll share it with you. If not, it's just going to be pure speculation. Now, Kiwi's probably in exactly, well, it's not exactly the same boat, actually, because the Kiwi has already put in a potential reversal pattern. If I look at the daily chart, it's not as evident. But if I look at the 4-hour chart, which is where we were, it should be pretty clear to you that we've got a left shoulder here, a head, and a right shoulder bang on the weekly pivot. Now, this is a beautiful little scalp that you could have taken. I'm not a scalper, so I don't take it, but nice little scalp on there, as that did hit the weekly pivot and has so far looked to form this right shoulder. That may well be the case. If it is, then we've got a very clear neckline, which is tantalizing. If that's the right, actually, it's not tantalizingly. It's awful where it is. It has to break, and it has to take out the monthly pivot, right? So if we are going short here, break down here, take out the monthly pivot and retest it, then that would be the trade, this being the neckline at a beautiful spot. And if you go to the bigger picture, and I spoke about the daily chart there a little bit earlier, what if that's the left shoulder? What if that's the head? So if we look at that in context, if that's the left shoulder, that's the head, then aren't we going down here and coming back here? That's kind of where I'm at with the Kiwi versus the dollar. To trade it right now, very, very risky. As I said, the scalp would have been the nice little entry, not a scalper. But if we got a break of the daily pivot and retested it here, I may well be tempted to trade this down and look for this level down here, right? So this becomes the neckline of the bigger picture. So I think the Kiwi is far more interesting than is the Aussie at the moment. So I'll be keeping my eye on that. If I see anything in terms of setup, I'll certainly put that in the Telegram channel for you. Dollar CAD looks like a false break here. Now, again, it's exactly the same theme, right? If the dollar is going to sell off a little bit further today or tomorrow, or the next day even, then this is a very clear picture for me as well. This looks like a false break of the resistance trade line, and certainly a big bounce off the monthly pivot. Again, a nice little scalp there if you're a scalper. And now we've settled on the weekly pivot. The key for me will be if we break this support level and then that turns into a false break. So a false break of support here would be the thing that I'm looking for to trade long. I think you're getting the picture. I need to have this dollar unfold itself. So get to that support level and then look for the rally. And that's kind of the theme that I'm going along with. I may be sitting here next week going, oh shit, didn't happen. But so be it. You know, that's just the way it goes. If you've got a theme and it doesn't work out, no big deal. But if the theme comes to fruition, then you can be very, very confident that you're in the right space. And that's exactly where I'm at right now. So I want to see this break low, maybe match this level. Maybe that's a right shoulder based on this one, and then come back above and retest. Then I'd be super confident to go long. Let me retract that, sorry. Super confident to go long the US dollar is not a word or not a phrase that I should be using, because I'm not. That is not a phrase I'm using. But from a technical point of view, that certainly makes sense to me. Now, dollar yen, probably one of the hardest currency pairs that I could ever wish to trade, or ever wish not to trade, basically, is where I get to. But at the moment, that is looking like a break of a longer term resistance trade line, daily chart here, and a retest of it. And indeed, the monthly pivot and the weekly pivot. This little candle here that's forming does look very, very interesting. If it's a white body, it won't be that interesting for me, but if it were to turn into a little bit of a black body, then I would start to get interested in that. And that may well be a long here. Again, it's all about the US dollar and that retracement level. Dollar Swissy is also looking very, very much like a false break of resistance. And again, the same thing. I want to see it pull back to the weekly pivot. I haven't really got a trade line there as yet, but if it does pull back, say gives me or say that becomes a higher low, right? Break down here, hit the weekly, get back above here, retest it, and away we go. Again, you know, it's the time thing, and it's going to take quite some time. I'm speaking of time, we're completely out of it. Pound Aussie, I've got that short order in play. Do I want to stay with it? Look, I had a look at this earlier, and it looks, again, you know, this is a common theme, isn't it? They look like false breaks, but they're not perfect. And Pound Aussie is one of those as well. I couldn't take that on the 4-hour chart. Why? Because I can't just enter there and trade straight into the weekly pivot, or indeed the top of that ascending triangle, which has, for all intents and purposes, been broken and retested. Very bullish, actually, that signal. And it wouldn't surprise me to see this go on with the job. And I know there are people around who are quite keen on the pound and think it can just go quite some distance, and could well. As long as it gives me the right signals, I'm okay with that. And maybe this is it. Maybe this is a break and retest and it goes to the monthly pivot. Could well do. I don't have the exact reason to trade that at this point, so that's not for me. However, the daily chart did give me a signal for the short this morning, and that was it there. If that high is taken out, so if you get a close above here on maybe the 4 hour, but certainly the daily, then I will cancel the order short and just sit on my hands until something turns up. But as I said, maybe that break and retest was the signal for the long. We'll see. CAD yen, I was looking for a lower high based on this double top here. That has occurred, but untradeable for me. I just can't trade a bearish bar short, doesn't work for me. And I'm looking for another one. So maybe daily pivot gets tested. Maybe we'll get a spike above it and pull back off it. That would be interesting. That would become a lower high. The issue I would then have is that we're trading straight into a weekly pivot, which has been tested and broken. So it's not that problematic. But I think the best case scenario would be some sort of confluence here. So let's break up here, take out the trade line, hit this level, come back underneath it, and then retest it, retest the confluence. We've got to take profit at the weekly pivot, though, if that were to be the case. So keep that in mind. And finally, Swissy yen. Well, it hasn't moved, has it? We're bang on entry for this short if you wanted to follow it. It is kind of a slingshot too, but I don't think it's pulled away far enough to be a genuine one. I said this to Shukri earlier off air, that maybe there's a slingshot 2 on today. Maybe that slingshot 2 is the pound breakout trade. I don't know. It's also got to get away from the entry level, and this one hasn't done that. I was anticipating we might find price up here, and then we could call it. But if you're of the same opinion I am, that this is a nice little signal off the pivots, I do expect this to fall further. So as I say, pretty much bang on entry at the moment. They're the levels if you did want to follow it. Okay, I can't see any more questions in the box, guys. So it is that time of day where I must bid you adieu. And thank you very much for your attendance. Those people who oh, what a nightmare. Thank you, Angel, for controlling that post Paul and his intervention. It looks very much like that is now under control. Guys, that's it for today. Hump Day is just about done. There'll be more, obviously, if there's anything to let you know in the Telegram group. If you haven't joined it, you know where the links are. Do that. It's free for the next 28 days. And we look forward to catching up with you tomorrow. Have a good one, guys.